Good morning. It is the 20th day of April 2017. My name is Derek and welcome. And in today's video, we'll take a look at silver, Bitcoin, and PIVX. But before we do that, let's first take a look at some bullion sent out by the US Mint, or what their mintage is thus far through 2017. And silver, 5 million in the first month, but very lackluster to continue further, as was the end of last year. You can make the same case within gold and platinum. I'll be looking forward to data that comes from the 2016 results regarding from the Silver Institute when I end up finding it, because this only gives us an idea of silver eagles, something I myself don't like, but I'm Canadian and I get maple leafs cheaper than I do eagles. But the numbers are extremely low. It's almost as low as the volatility in the daily chart for silver, which so far at around 9 o'clock in the morning is 0.55%. This is about 14 hours or so of trading. 15 hours rather, 6 o'clock p.m. the night before the market quote unquote opens. Same question from a day and a half ago. Successful support or failed breakout? No answer yet? I guess it's no, there's no answer yet. I mean, I don't know what the answer happens to be. I can see in here we got what could be setting up as that of a higher low. I really wouldn't have been doing too much these last 2 days, because after coming to the band, rallying even up to the top part of the band intraday, and then falling and hanging in on the bottom end, well, it's still finding the support, the higher low within the key area, but it's definitely weaker at this point than when it was first in around the 1817 area. And the next range of support would probably be this band of roughly between 17 and 3/4 down to about 18. But if this thing falls even below then I'll be talking about this breakout as your typical, done so many times in the past within these markets, failed move, fast move to the opposite direction. Let's now move on to Bitcoin. Let's talk about the weekly and the daily chart, and they both have the exact same current phase and trying to leave this 18 average band. And I've talked about this before. When you leave the band from in a bullish trend like this, you can get some pretty decent sized pops. And now this is week number 3 in that attempt to do such, leave the band. And it has done extremely well in holding the support. Very, very well. However, it has been very lackluster this period and the last as far as extending its highs. Low volatility, only 6.2% for the week. Of course, you can't know that by the number. You can only tell by looking at these very small candles in comparison to the previous ones being much larger. But on the break of such gives you 2 levels of resistance, one previous high, and then extending new areas. So on this point here, there's the previous high. Wasn't much resistance, really none at all. And then in here, previous high, you can see it was resistance for a while, sort of like it is now. And then in here, well, there wasn't much previous resistance, so it'll be interesting when it comes up. If this thing just keeps going through, well, the potential area breaking 14 into 1500 is definitely not out of play. Let's transition this to the daily chart with, again, the same pattern, trying to leave this 18 average band. Pretty nice, interesting pattern, all things considered, using Fibonacci retracement from the high of, I probably should be using 1295, but so anyway, within that for the high, I'm using the low. What am I using anyway? Probably should redo this. Okay, so we got a high of 1229, which is this high. That's fine. Okay, this is fine. This is fine. I was wondering, I mean, it's been so long since I've really been doing too much on here because the market's been doing a whole bunch of nothing for the most part. But from this level to this level, now that I know what's going on here, the support level came at a 23.6% level, bypassing on a more common one, which is a 38.2% down level. When I calculate Fibonacci, I use exponential Fibonacci, which is exponent. And I have not heard a single other person use it or mention it. I can't say that. I went to one trading platform site a few years ago, and I was so shocked to see them having exponential Fibonacci on their calculator. But everyone seems to use the calculation of high, subtract low, multiply Fibonacci percentage, plus low. See, I don't do that. No. I do high divided by the low to the exponent of Fibonacci percentage, and then I multiply the low. And on your calculator, you'd be looking for an x to the y to get the exponent. So if you were doing the number xy, your Fibonacci, maybe 0.618, and then so on and so forth. So that is how I basically calculate my Fibonacci retracement. But this thing has a nice little pattern. It's got this upward trend. It's trying to leave the band. It's been like this for a few days. Lackluster in making new highs, but very good as far as holding a very good higher low. And volatility only in at 1.65%, but the day, well, it's not young, but it's definitely not old. There's still half of it almost remaining within such. But once this thing gets going, then, like I was mentioning in the weekly chart, you're going to come to a test of this. And maybe that's only where you're going to find much resistance is the daily chart. I don't know. It's a then what situation. I figure we're going to go to some point. We'll see how the market handles from there, and I'll reevaluate. That's what I usually do. But I wouldn't be surprised if there's little to no resistance here when it gets there. But again, wait for the message of the market. Final chart will be the short-term chart of PIVX, which is taking data from CryptoCompare.com. And some of these gap opens and moves may not be the most accurate. What is accurate is the high of 1800, the low of 1308, and pretty much the direction of all these moves. So therefore, Fibonacci key level and key level. So therefore, when this thing was going down, you would have probably been able to predict this if, of course, you understand how the Fibonacci math works, because these areas can often work within key levels. With that being stated, if this thing goes lower, then I would expect this line to move somewhere down here. And that means you can use different calculations to try to figure out what that's going to be. And let me just show you a quick example of how I would do that. So I'm looking for the 38 to the 61.8 to be about 1477. So let's now go to a spreadsheet, and that will be probably the best place where I could show you how to do the data. Okay, so if this number 1477 is to be put into here, then if it comes down to 98, we can see that's already 1427. And I like to use, and that's 1443. So basically, just by doing that type of math, if there's further decline, I would be looking for somewhere around a pierce above the key 100,000 Satoshi mark as an area for support. Also, with that being said, after this move, markets are stabilizing within this area. So if it can find a way to support this area, but mainly create the failed breakdown, it's going to be doing this now short term by breaking well above the 15.25 level. Then the things will be starting to look good. Now on the break of 15.25, all you can play short term is to this mark here, because that would be that then what situation. What are you going to do from here? If you want to stay bullish, you better be holding this mark kind of deal is what I'd be thinking. And for me, these type of moves are what I want, because I can wake up in the morning, which I did, and see buy order, buy order, buy order, buy order, buy order, buy order, and buy order. Sweet. Then I can play sell order, and sell order. And then keep the rest on inventory, because I got a little, not scared, but back in here, I'm like, you know what? This thing has probably got a better shot at going a little lower, so let's just liquidate a little bit more. And then I say to myself, well, if I don't do it at all, I'm probably going to regret it. And if I sell some and it goes higher, I'm going to regret it too. And if I sell like I do and it goes down, I'm going to regret it again, because why didn't I sell everything? Of course, that would be, in my book, poor bankroll management, because the markets are always going to do what they're going to do. And you're not always going to be right within the situation. But at many times, I've noticed that I am. And the best you can do is stay focused within the market and adjust to such, so that when you see new things that are different, then you can make sure you have the highest advantage that you possibly have going into every trade. Thank you for tuning in to this morning's video, and have yourself a magnificent day. Bye-bye.